Working at the car wash, baby. Today on the workshop, we're going to have a look at the roller coaster ride of the symbol CAR, C-A-R. It's the Avis Budget Group. Looks a lot like the GameStop days, the GME days that happened a few years ago. Let's break all this down after the bell. It's just good fun.
I was about to say you could not wait until the first song was over before you started the second one.
Yeah, I just love that little theme. I don't know why. I'm not even a cowboy. You know what I am now? I'm a Buffalo Sabres fan. So anyone out there from Buffalo, give me a shout. I don't have a good reason. I like the hat. I saw them play a game that they won. They came back and won. I'm like, okay, I'm a Buffalo Sabres fan now. I mean, the Blackhawks aren't even I don't think the Blackhawks could beat a good high school team right now. But, that is what it is. Anywho, so how are you?
Doing all right. Just came back from RMC last week. And
yeah, that's the SIBO thing, right?
The SIBO thing, yeah.
Okay,
I was, couldn't find you there. I was looking around, but, I couldn't find you.
No, I was not there. I could not make that.
Yeah, actually, I spoke there, so it was good.
Oh, good, even better. I love it. And so we have OIC coming up. So a little shout out there. That's coming up in early May. That's an industry event, not for probably retail folks, but for more institutional. But we'd like to go to that.
Afterward, isn't there a retail event in the same spot?
What? Yeah, there's the Tradier SIBO Summit on May 7th and 8th. If you haven't made your tickets, you should do them now. We'll give you a link in the bottom of this, or email me, lex@tradier.com, and I'll give you all the information. We may even give away some lucky spots. We'll pay for your hotel on Thursday night and your entry fee. It just depends on how I'm feeling. Just send me an email with golden ticket. You got to make sure you come. Anyhow, let's get busy. So CAR, C-A-R. It's Avis Budget Group. It looks a lot like GameStop. Remember those days?
Mm-hmm.
So this stock is utter insanity. The other day, I want to say 2 days ago, right? It traded as high as $847. Wow. Is that right? Yeah. And now it's trading $291. I'm just watching it tick right here. $291. So, let's call it $500 difference. So what's going on here? You're the Gamma Vana charm guy. What's happening here? Why this explosive move up and then down and all around?
So actually, there's a couple of things that converged. While it looks like a lot like GameStop, it's a little bit different because this wasn't like a Wall Street bets thing. This was a couple of hedge funds identifying an opportunity and taking advantage of it. If you want to look at, can you share my screen? Because I have Voland up.
Okay.
One thing that is very similar is right here, the spot vol correlation for CAR. Got to send it on teal. The spot vol correlation is positive, and that to me defines a meme stock, right? Where
explain that, because I know not everyone knows what that means. Spot vol correlation.
So this is the correlation between the daily moves in the underlying, so like the CAR stock price, and its implied volatility change.
Okay.
Normally it is negative. Like on SPX, when implied volatility comes down, the market goes up, and vice versa.
Okay.
And that's in a healthy environment. That's the way it's supposed to be.
Okay.
In CAR or in GameStop, historically, this happened because people were buying calls out of the money at a rapid rate.
Yep.
And it turns out that I read a story on, I think it was Wall Street Journal, but I read a story that it was like about 3 hedge funds, as opposed to the Wall Street bets people, that recognized that one hedge fund was holding most of the stock, and about 50-something% of all shares were short float, right?
Okay.
So they were short sold. So these hedge funds got together with the one that owned all the stock and said, "Don't sell," and they pumped the price way up after buying a bunch of calls,
Yep.
and pumped it all the way up, and now it's selling off, like to the point where I guess right now it's down 39% or 32% or something.
Yeah, 35-ish.
40%.
Yep.
Yeah.
But
So
it was down 38% yesterday or something like that.
yesterday it was down 40.14%.
There you go. See?
Yeah. So when it was Wall Street bets, people were holding and diamond hands and all that kind of stuff. Hold. But now it's because it's like a few larger pockets, it's getting sold off a lot quicker.
Okay.
The other things too to note is the implied volatility on this went skyrocketing, and I'm sure we're about to talk about that now.
Yeah. So okay, before we get to that, I get the vol spot correlation thing. So you're saying that in this case, as stock went up, vol went up, which is unusual.
That's right. Yes.
Okay. So that's positive correlation. Is that the right term? Okay.
Yes.
So that's very unusual, folks, because what typically happens in an equity or even an index is, I guess it depends a little bit on the explosiveness of the up move, in which case this one is beyond belief. But there might be times when even in some of the normal products without something like this, where you get a pretty explosive upside move, you might have positive vol correlation, but generally it's going to be negative, where that stock, meanders up, vol comes down, right? Which is very typical, and it's the opposite on the put side.
Yes. Yeah, on NVIDIA, for example, this is negative here. Gotcha. This is the norm.
That's right. Okay.
But CAR, GME, for that kind of stock, that's when it flips positive. It is positive on stuff like gold, oil. A lot of commodities, spot vol correlation is positive as well. But on equities, this is rare, and it pretty much only happens on meme stocks.
Yeah, I agree. Okay, so did you have a study of gamma in this thing? Was because what I noticed is that it isn't the most liquid stock in the world in terms of option open interest.
Right.
So it didn't trade a whole bunch, but I'm wondering what that shows. Here you go.
Yeah. So this is gamma. Dealers have a lot of positive gamma right here as the market started selling off. This was changing yesterday and the day before considerably. Over here, we had a lot of negative gamma, which means dealers were actually short calls because people were buying calls prior to the pump, right? Down here, we have some puts that are short gamma. So right now, everybody, I guess, like all the hedge funds and anybody who recognizes what's going on, is starting to sell vol. So that's what we see here. But when we look at this for a couple weeks ago, you'll notice a lot more negative gamma.
Yeah. Okay. So that's a little that gamma chart looked a little balanced to me, because it looked like there's positives and negatives there, right? At different strikes.
Yeah, and right now it is, but you could see here right here 2 months ago or 2 weeks ago, I'm sorry, it was all negative gamma. Like they were buying up calls at the highest strike they possibly could, which at the time was 380.
Oh, 380. Okay. So we zipped through there a while back, or no, a couple days back, and then have zipped back down.
Having to offer new options classes.
Yeah, right. Okay. Well,
over here you can see also people were buying puts as well.
Yep.
So people thought, oh, this isn't going to last very long, I'm going to buy puts, and then they got spiked all the way up to 800.
So here's the deal. Okay, I was looking at this stock. Someone brought this to my attention, and I typically don't pay attention to these kind of stocks until someone told me to. So I was looking at it. What's today? Today's Thursday. I was looking at this a couple days ago. Let's call it Tuesday. 3 days to go to expiration ish. So it could have been Wednesday. Stock was, let's call it 500. Making that up again. It was right around there. They had 900 calls on the board with 3 days to go. Okay. What do you think the market was on those? Do you have any idea? Just ballpark guess.
I don't know, but I would say the spreads were probably at least 10%.
Oh, they were. I mean, the spreads were $4 or $5 wide.
Yeah.
Okay, so here's the dollar value, the handle on the 900 call when I looked at it. It was $43 at $48. With 3 days to go, 500 points out of the money.
Wow.
Holy cow. Now, having said that, the stock traded up to 850-ish, thereabouts, I think.
Mm-hmm.
Okay, the other day. And then it's sold off, tremendously since then. So I guess my question to you is this. How do you trade that? Okay, and I was looking at the deltas too, and everything was trending toward 50-ish delta. Now, it's not exactly 50, but it's trending there. So everything has a coin flip probability of being in the money, sort of in options parlance when you get to 50 delta, right? So how do you price an 890, 900 call spread with 3 days to go, a $10 call spread? Is it simply $5? Is everything $5 because it's such a high volatility?
Well, I think the way you trade this depends on when you actually notice that this is happening. Mm-hmm. I didn't notice it until Monday when somebody on my show, when Jay on my show said, "Have you heard about CAR?" And I'm like, I did not. I'm sorry. I've been out of pocket for the past week. All I know is that the whole market rose. And I looked at the pricing. I'm like, it went from like 50 to 800 in like 2 weeks.
Yeah.
Didn't have a red day in 20 days. And I was kind of shocked. I'm like, what is CAR? Avis. Like,
I know, right?
Avis car rental. What? I thought it was like, maybe this was a flying car, and it's, I don't know, but I was like, Avis. So yeah, then I was like, oh, it's a meme stock thing. Started reading up on it, and there was nothing in Wall Street Bets about it. So it was kind of interesting there. It wasn't like a retail revolution kind of thing. Right. But you could see, like, as only 1 week ago, those 380 calls skyrocketed. Like, there were so many that were bought. Mm-hmm. And that was just the major imbalance. I think these were bought by those hedge funds. They squeezed all the shorts out, right, and they sold it off.
Yeah, but I want to sell that.
How do I trade it?
Yeah, I want to sell that spread because I don't believe in the 900 number. And if I'm selling the call spread, I have protection, right? If you were the world's biggest baller and you could just tell me you're not dying on the show. You're okay over there?
Yeah, I'm all right. I have a cold, so
just checking. But if you're the world's biggest baller, I want to sell the $43 call with 3 days to go as many times as I can possibly can. Naked. Okay, I know that's not realistic, but I wish I could. So if I got to do something, I got to sell the call spread. Mm-hmm. I don't know where we get it. You pull that spread up, the market is like, some like $10 wide. So you're not really getting anything on anyhow. But what do you think fair value is? Is it something in the middle-ish? And can you take, the deltas are all around 50. So you got a 50% chance on the low strike, a 50% chance on the high strike. 3 days to go, you can do that math. If you take 3 divided by 252, take the square root of that, yada, yada. You could come up with an equation. It's probably going to be somewhere around 40% of that strike width is fair value. Yeah. I'm not sure I want to buy it though. But
no.
It might have been right to buy it because I guarantee you it gained value when it got up to 847.
Yeah. I think the thing to do, if you're stepping in like you and I, like 2 weeks after it starts, I think the thing you want to do is sell vol. It's you don't want to really take a directional hit. And as it gets to like that 4, 5, 6, 700, you start to think, okay, we're probably hitting like a top here. You do have to know, you do have to do your due diligence. Is this a Wall Street Bets hodl thing, or is it a market manipulation by a few big pockets? And because it's a huge difference. If it's a few big pockets, we're going to tank fast. If it's, Wall Street Bets, it'll probably meander. GME is still very overvalued from a fundamental standpoint. Right. So you kind of have to gauge like who's doing this. And if you understand who's doing it, then you could try to sell that vol because everything's not going to be 50 vol forever. And right now is probably the time to do it.
Yeah, and the other, yeah, so that's all good stuff. The other interesting thing though is what people should see in this move is that, as you mentioned, the spot vol correlation is positive to the upside in this case. Okay. It's negative to the downside because as this stock goes down, vol comes in, which is counterintuitive as well. And it may have leveled out now because this move is so big. We're down $171 in the stock now. It's down 38%. So maybe all of a sudden that negative spot vol correlation has kind of lifted itself up back to zero because this is a pretty enormous move to the downside, right?
Yeah, we could also see now too with Voland, we could see if VIX has gone up or down.
Okay.
On CAR. So let's check it out. But I would have done like a butterfly around like the 300 mark. And I looked at it like a 100 wide butterfly at 300 was like $90.
Why a butterfly?
It was like $10.
Yeah, why a butterfly at that price? What's the reasoning?
Oh, it was just because I was expecting it to come down.
Okay.
Positive spot vol correlation means that VIX should be dropping. It's correlated. See, it's the implied volatility is down 46 points on CAR.
Yeah. So does that mean to the downside? Does that mean it's positive as well? Because as it's going down, the vol's going down. So that's also positive. I said it backwards then. So strike what I just said. I said it's negative, but it's positive, which is unusual. It's usually the opposite.
Yes.
Okay.
Yeah. Usually when you're looking at this widget, the ticker widget, the price if the price is red like this, then the vol is green.
Green. That's correct. That's correct.
That's a negative correlation. A positive correlation when they're both the same color.
Yeah. So in this case, in CAR, unusually they are both the same color.
Yes.
To the downside.
Yes.
And to the upside.
Yes. And the other thing too is if you tried to do a butterfly, this is what kind of got me on the butterfly.
Yep.
Tried to do a butterfly at like 400 because I started exploring it yesterday.
Sure.
Usually when you're on like SPX or normal stock, you do a butterfly and delta neutral is below the short strike, right? Because of the skew. In CAR, it's above the short strike. And you're kind of counting on implied volatility dropping enough that if the market came down, that the vol would swing so far that you would make money on it. And that's why I didn't do a butterfly necessarily. Like now is a great time to probably do a butterfly or something very short gamma, an iron condor, very wide iron condor, make some money on that. You just have to also kind of gauge where CAR is going to end if you're doing a bullish iron condor or, the bullish wing. But so I mean, that's kind of that's what I would start looking at.
Okay, got it. What else can we talk about on this one? I'm trying to think if there's any other tidbits that are important.
I'll give one tidbit that's important.
Yeah. Okay, go ahead.
Don't trade this.
That's funny you said that. I was gonna say the same thing. That's exactly what I was gonna say before we left. And what's your reason for that? I know what mine is, but go ahead. What's your?
It's first of all, there is something going on here. This is Avis car rental. Okay, this isn't like flying cars. This is Avis car rental. What you're gonna need, that this is a flow kind of thing. That's the other thing I was gonna point out is this is flows. This is not fundamentals. You can't, there's not going to be you can't go through JP Morgan analyst ratings and figure out that it was going to go from 70 to 800 in 3 weeks. That's, throw all that stuff out the window. What do you know, as a retail trader, what do you know about the flows of this? And the answer is, if anything, it's only a sliver of what you would know. So I am pulling out I'm pulling out my inner Mark here, and I'm going to say, you don't know anything. Don't trade this.
Yeah, I think that's fair. The only thing I'd say is if your opinion is that this stock is a short squeeze, okay, and it's going up, like insanely fast because of that. There is a spot when the elevator has no more momentum and it's all done. And guess what's going to happen? What we're seeing now. So having said that, there's probably a safe way. And I chose the 900, the 890, 900 at the time. It was the highest strikes. They had 1,500 strikes. I would have chosen the 1,500 14.90 if I could, or 14.50 for that matter, and sold that. That's the only thing I'm doing. And the other thing I'd say for retail people not to trade this, the markets are insanely wide. If you get in a situation where it's trouble, you're not getting out. You're going to get crushed. Okay. So the only thing you can do here is sell your call spread and expiration come early, baby, and that's the end of the story. This is not a ground for active trading at all. I hate to say.
So the 10 wide options, you could sell the call spread. You'll probably get $5 credit, or you could buy the call spread for $5 debit.
I know.
It's all 50 delta all the way across.
Pretty much. Yeah, that's what it was the other day. So anywho, all right, cool. What else? Anything new at Volin? We're gonna hit the road. So
Volin, our newest release is the term structure exposure. So this is aggregate exposure by Greek at each expiry. So
hey, is my login still good, by the way?
I didn't remove it.
Well, I'm gonna log in because I like the new color. You get the dark background. I'm gonna log in today.
So this background, you mean like the dark versus light? This thing?
Yeah. Hang on. Let me edit back. Hold on. There it is. Go ahead. Let me show the dark versus light. Let's see it.
All right. There's the dark. There's the light.
Love it. I like the dark better. I mean, I
do.
Yeah, that looks cool. Okay, good. Any new features?
I was talking about the term structure here. Yep. We did a lot of work on our institutional pages. Also, check us out. We're on Financial Juice now. When you get those Financial Juice feeds, you're going to see some Volin data on there.
Yeah. So the other question I had for you is, with Volin, do you show skew data, intra-month skew data, and month to month? Yeah.
So we do. We have a vol plane right here.
Okay.
And you kind of have to rotate it a little bit. This is SPX over the next 30 days.
Okay.
But yeah, I mean, you could look here. This is the near term. So we're back to contango.
Yep.
All the way up into 4 days till expiration. And then we have the typical backwardation for 0 DTE. Yep. You can see every single strike, every single option. It is also color coded. So if you want to see these, this is right now showing Vanna. So you could see all the big negative Vanna strikes over here in May. Mm-hmm. You can see some positive ones you could just check it out by the color. Cool. We do it that way. And also for our, so this is horizontal skew. Our vertical skew kind of metrics are coming out soon in our volatility analytics.
So what I was going to ask about, which is kind of cool, and you might do this, is, like let's take car, for instance. I'd like to see the normal car skew, and I'm sure it's a very typical curve before all this happened. And I want to know if it's a leading indicator to an up move. If all of a sudden you start noticing the car skew flatten and then become call sensitive, meaning call positive versus put, and you're like, what's going on here? And you say, and the move hasn't happened. You're like, why is the upside skew so steep in car? And and if that's true, you say, okay, something's going on here. I'm going to buy my call spread, or buy a 50 delta call, because this looks like a big up move coming. Is that possible to discern, or do you think the move?
I don't think you're going to discern it prior to the actual drop.
That's what I'm talking about, the up move, or any move for that matter.
Yeah, I think during the up move, like you could see here, the tomorrow's expiration implied volatility is all the way up at like 500, right?
Yeah,
this one right here.
Yep.
And you could also see that the implied volatility does taper off a little bit, but we're still at like this is 127. It is kind of messy, the whole curve. But you probably can't see like a major up move based solely on implied volatility, but you could see some very cool opportunities.
Okay.
When you see something like this, what is that expiration right here, where we have like for 43 days out, where look at that skew curve here. Let me narrow it down a little bit. Yep. But if I go specific date range and I say this, look at that June skew curve. Like when you have skew curves that are as messed up as that, right? You're gonna find some opportunities that didn't exist before. So,
I mean, it would be great if if we're trading. You know, it's just not trading.
Yeah, it's not worth it. It's not worth the edge you're giving up, but
right. I agree.
It is interesting.
I'm trying to show something here. Hold on. Hang on. Let me see if I get this done. All right. Here we go. I'm getting there. I'm sharing my screen. All right. Cool. Luis, I'm ready for my next announcement. Then we got to go.
All right.
Let's share. There it is. Jason and I and Mark are going to be here. It's called the SIBO Trader Fest Live Summit. It's in West Palm Beach on May 7th and 8th. This link you can find. We'll put it in the description below, or send me an email. What I'm going to do is I'm going to give away, right now I'm going to give away 5 golden tickets to start. See how we go. If you send an email to lex@tradier.com and you go to this thing, we will pay for your Thursday night hotel and your entry fee. It's about a $500 value. So
I'm gonna email it.
You're gonna email me, and you're not getting one. And what you got to put in the email is, I saw you on the Traders Workshop, golden ticket in the subject line. I'm gonna go. I will give you details when you send me your email. If you're interested, it's coming up. Rooms are going. We're almost full. So we want to get that last little bit of folks there. We'd love to see you in person live. It's going to be great. 20 expert speakers. I'm going to call Jason one of the experts. He'll be there in person. I'll be there in person. Plenty of folks. It's going to be awesome. So send me an email, lex@tradier.com.
Lex@tradier.com. I'm actually sending. You guys better hurry up out there, because I'm sending it to my subscribers that I know are coming.
All right. Awesome. Good deal. So get it done. Get it done. All good. What else? Volin.com. Mark is harvestedfinancial.com. Sorry you couldn't be here today. I think that's all we got for today, right?
I mean, yeah, sure. I mean, we could. There's always topics to talk about. I could talk.
No, we're done. I've got a short attention span. So
okay,
we're done. All right, dude. Have a good weekend. In Mark's honor, happy trading, and we will see you next week.
All right.
Bam.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.